right, let's get right into it. Today, we're diving deep into the high-stakes world where artificial intelligence meets finance. We're talking about how to tame these incredibly powerful algorithms in an industry where, let's be honest, trust and precision are everything.
And believe me, this isn't just talk. We're seeing financial giants betting big on this tech. Just listen to JP Chase. They say AI isn't some side experiment anymore. It is the core engine of modern banking. I mean, the whole industry is being reshaped right before our eyes.
And if you want a sense of the scale we're talking about, just look at Bank of America. They're pouring a staggering $4 billion into AI and new tech. And this isn't just them playing around with new toys. No, this is a massive, fundamental investment to modernize their data, make clients happier, and get a huge leg up on the competition. And that right there is the billion-dollar question, maybe even the trillion-dollar question. Because when you have that much money and the stability of our entire financial system on the line, what happens when things go wrong? And they can go very, very wrong. See, when an algorithm messes up, it's not a small glitch. The fallout can be huge, and it can happen in an instant.
So this really brings us to the heart of the matter, what you could call the AI gold rush. It's this classic two-sided coin, right? On one side, you've got this incredible promise of efficiency and innovation, but on the other, you have this very real danger, new, complex risks that can be absolutely devastating.
And this danger is not a hypothetical. So, get this. A finance worker in Hong Kong gets on a video call with who they thought were their colleagues and ends up transferring $25 million. Turns out, they were talking to AI-generated deepfakes, avatars, not real people. It's a pretty terrifying example of just how sophisticated these threats are now. A simple video call just became a multi-million-dollar heist.
Okay, so if we're going to protect ourselves from things like that, we have to get really clear on what we're up against. And it's way more than just a system bugging out or a simple error. We really need a whole new mindset for thinking about the consequences. So let's start with the basics. What even is AI risk? Simply put, AI risk is the chance that these systems could do something harmful or, just something we didn't intend for them to do. And that's a huge umbrella, right? It covers everything from a technical glitch or a cyber attack, all the way to ethical problems and even messing with the entire market.
Okay, but here's a really crucial word we need to unpack: harm. Because harm isn't about the system's performance. It's not a metric. Harm is the human side of the equation. It's the real-world negative impact on actual people, on communities, on all of us. And that one word, harm, completely shifts the focus. We're not just talking about engineering anymore. We're talking about ethics and accountability.
This bridge analogy really hits it home. You see, negative impact is the technical fact. The bridge collapsed. Okay, traffic's bad, costs money. But harm? That's the human story. People got hurt, their livelihoods were ruined, and nobody trusts the city anymore. So when we talk about AI risk, it's not just about stopping the system from crashing. It's about protecting people from the fallout when it does. Okay, so what's the financial industry actually doing about all this? The big goal here isn't just to build smarter AI. It's to build AI that we can actually trust. So let's break down what trustworthy AI really looks like.
Trustworthy AI isn't just one thing. It's a whole collection of principles that have to work together. So of course, it's got to be reliable and robust, safe and secure. But it also has to be accountable and transparent. It needs to protect our privacy. It must be fair and unbiased. And this one is huge. We have to be able to understand why it made the decision it did. It has to be explainable. Every single one of these pillars is absolutely essential if you want anyone, the public, regulators, to have any confidence in these systems.
Look, having a list of principles is great, but they're just words on a slide unless you have a real plan to put them into action. And that's where these structured risk management frameworks come in. Yeah, you can think of them like the blueprints or the safety checklists for building and running AI the right way.
And one of the most important blueprints out there comes from NIST. That's the U.S. National Institute of Standards and Technology. Their AI risk management framework is basically the go-to rulebook for any company that's serious about handling AI safely.
And what's great is that NIST breaks this really complex process down into 4 clear steps. First up is govern. This is where you set the policies, you figure out who's accountable for what. Next, you map. You have to identify the context the AI is working in and map out all the potential risks. Then, you measure.
You can't manage what you can't measure, so you use clear metrics to evaluate those risks. And finally, you manage. You put controls in place and you actively work to reduce those risks. So it's govern, map, measure, and manage. And it's not a one-and-done thing. It's a cycle that you do over and over again.
But you know, even with the best framework in the world, there is one piece of the puzzle that is absolutely non-negotiably critical. And it's not another algorithm or some fancy piece of software. It's the ultimate fail-safe.
You guessed it, it's people. Good old-fashioned human judgment, human oversight, and the ability for a person to step in and say stop, that is absolutely essential. Because at the end of the day, no matter how smart the AI gets, the buck has to stop with a human being.
Now, this human oversight isn't a one-size-fits-all thing. It can look pretty different depending on the situation. First, you have human in the loop. This is where a person has to actively sign off on a decision before it happens. Think of a loan officer who has to personally approve every single loan rejection that the AI suggests. Then there's human on the loop. Here, a person is watching over the system and can jump in if something looks wrong. A good example is a risk manager keeping an eye on a fleet of automated trading bots. And finally, you've got human out of the loop. This is for the low-stakes, autonomous stuff, like a chatbot that just answers basic customer questions from an FAQ. And figuring out which level of oversight to use, that is one of the most critical risk management decisions you can make.
And all of this leaves us with one pretty big question. As these AI systems get more and more powerful, almost unimaginably complex, is our current playbook for human oversight actually going to be enough to keep us safe? That right there is the challenge facing everyone, from regulators to the banks themselves, and really, all of us.